Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema joins us today. Guys, good morning.
Hi, good morning. It's 1 year since Ratan Tata passed away, and in a way it just feels like yesterday. Though his legacy does, live on, we will always remember him, and he continues to inspire everyone. And, 1 year.
Yeah, absolutely. Great man, but unfortunate that you've got, this looks like what is infighting within internal strife, whatever you want to call it. Hopefully it gets resolved. For the betterment of everyone.
Well, that's right. And overnight, plenty of news with regard to what Trump had to say. I saw a couple of reports talking about, some currency with his face on it, $250 bill. That'll be really interesting. I don't know, it wasn't confirmed, but I saw quite a few reports overnight that spoke about...
But why not, Nigel? Because the US currency has president's faces.
Yeah, so...
For 250, we'll have to... Anyway, we'll take it from the top, right, and tell you what you need to know, and we'll begin with the US. So there was a bit of a pullback day before yesterday, and that got reversed last night. S&P, NASDAQ, actually all indices back to all-time highs, and they finished at record highs. So 0.6 odd on the S&P, NASDAQ 1% plus. We kind of sort of have been talking about tech and AI in a variety of forms in terms of price action, news flow, deals, etc. So, look at this. AMD, another 11%. What a phenomenal week AMD has been having. So it should be, 45% this week so far for AMD after that deal with OpenAI. Dell was up 9%. They kind of sort of raised their long-term financial guidance upwards. And NVIDIA was up 2%. NVIDIA essentially says, there were reports which suggested that they're going to take a $2 billion stake in XAI. So, that's essentially the part of the market which continues to chug along and... move up sharply. The macro markets, dollar index, not very much, 99 or so. Oil prices, 66. I looked at yields, not 1-2 basis point change, so not putting it out there. One noticeable, there wasn't very much, but one noticeable data point was the FOMC minutes. And most participants judged that it would be appropriate to ease policy further over the remainder of the year, but they also... and most of these participants also said that there is upside risk to inflation. So, figure that one out. You had Fed Chair Powell, who will be speaking and making some remarks tonight, and markets will wait and watch what he's got to say. Remember, the problem is that there is no data because of the US government shutdown. We did not, for example, get the jobs data. So in that sense, the Fed is operating in a bit of a blind zone. So it'll be interesting to hear Chair Powell's sort of remarks, especially on that. How do they decide on policy with data not being there, at least latest ones? Now, China onshore markets returned from that Golden Week holiday. Of course, the Chinese listed securities have been trading in Hong Kong and elsewhere, but onshore markets are back after a fairly week-long break. I'll just tie in the levels here. So yesterday there was a bit of a profit booking session. Remember, it started with Tuesday's session where the market sold off and closed off the highs by a significant margin. And yesterday we kind of sort of went in that same direction. Not much, about 60-70 points lower. So these are on the Nifty, the levels that you need to watch out for. So the recent high of 25,220 becomes important. By the way, technicals, there is a bit of a shooting star pattern. The market basically, it made a high of 25,220, which is which becomes the resistance. But the 61.8 is 25,120, and you kind of turned around from there. So we'll have to see, what to make of it. Supports 25,000 flat, which is the 40-hourly exponential moving average, and then 24,830 is the retracement, 61.8% retracement of the rise, which we'll be looking at. Now, for the Nifty Bank. Which also, by the way, had a negative close. Support comes in at the 40-hourly exponential average, which is 55,782. And then there is a minor small gap zone, which is 55,616 to 55,727, which is the next support level. All within 1.5% from where we left off yesterday. And resistance at about 56,502. as things stand. Gift Nifty will give you a quick sense of how we likely to start, and we'll sort of pick up from there. 30 points higher on the Gift Nifty. Nigel is standing by with how the F&O positioning picture is looking like. Nigel, over to you.
Well, it's a Thursday, so again we'll have a weekly expiry that will play out. That's the BSE contracts will be playing out expiry. Now, in yesterday's trading session, we had a bit of a profit-taking session, but I think it's par for the course, and the data is still not worrying at all. Because the institutional data was actually positive, both the FIs as well as the DIs, they were mild buyers in trade. So that was pretty good news. What could have happened is there was some long addition in the previous few trading sessions, and there was some unwinding both on the Nifty as well as on the Nifty Bank. So more amount of unwinding of positions is what weighed in yesterday's trade itself. What about positioning? Well, the FIs are still short, mind you. They are close to 93% of their positioning. Continue remains on the short side. If you look at it in absolute contracts as well, the FI net short positions is around 1.89 lakh contracts on the short side. While the client positioning, you have around 1.28 lakh contracts on the long side. So both of them on the opposite ends of the spectrum. Not such bad news, actually. But the FIs, remember earlier, they were selling in the cash market and they were long in the stock futures. Now that appears to be reversing a little bit because these are arbitrage positions. So in yesterday's trading session, there were some shorts that were added in the system and there was some unwinding of long positions as well. Moving to the options data then. Well, in yesterday's trade, you had suddenly call writing that had come back. It outweighed what kind of put writing we saw. But in the last few trading sessions, more number of puts were written. And because yesterday we saw call writing did come back into play, that's why the PCR has come back down to around 0.8. Because the call writers, they feel they're back in the game. 25,100 call, 25,200 call. Aggressive writing is what we saw out there. While on the downside, the 24,900 put as well did see a good amount of open risk build up. So the level should come up for you in the screen. Last couple of trading sessions, we're going to around that 25,200 mark, and that's getting rejected. So this is a bit of a resistance zone. 25,220, you'll want that level to get taken out first on the upside. In terms of a reference point on the downside, 24,800, 24,900 is important. 38% retracement of the move, and even the options data suggests that these levels are extremely important. The Nifty Bank led the way on the way up. However, the 100 EMA is going to be important in terms of a first reference point that you're looking at on the Nifty Bank itself. Remember, it's trading above all the averages, so that becomes the level you're looking at. And today, you'll have earnings season that will kickstart. Yesterday, there was some optimism going into it because you had, tech actually that did do well. That was an outperforming sector. By the end of today, we'll be having TCS's numbers. So tech will be the swing factor, particularly in the last hour of trade. So yesterday, some profit taking, data not yet worrying. It continues to remain a bit of a buy on dips market till those lower levels get violated.
Thank you very much for that. Not just TCS, even Tata Elxsi will be reporting numbers along with GM Brewery. And the other thing to watch will be the weekly expiry for the BSE contracts. And today is the third day of subscription for LG India Electronics. And so far, 3.3 times already subscribed. So lots on the tap for this Thursday session. Let's get you some equity views then. Rajiv Batra of JP Morgan says he anticipates the earnings cycle to bottom out after 5 consecutive quarters of lackluster earnings and pave the way for a decent recovery going forward, driven by a low base from the previous year, policy tailwinds, a resurgence in economic momentum. He says the recovery should be aided by the ongoing rural revival, reduced taxes coming into effect from end April onwards, the ongoing monetary policy easing, declining inflation, and above normal monsoon and softer commodity prices. Now, in terms of levels, he expects the Nifty 50 to trade between their base case of 26,500 and a bull case of 30,000. That's the target over the next 6 months. He adds the preferred sectors remain consumer discretionary, financials, materials, consumer staples, hospitals, real estate, defense, and power. Okay, let's invite Jeffrey Dennis, independent emerging market commentator, joining us on the show now. Jeffrey, thank you very much for joining in. First, comment on this massive tech-led rally that we're seeing on Wall Street. Yesterday, it was AMD, which shot up double-digit up move. Are you getting a sense that the AI trade, is getting a bit overheated, frothy? Because there are concerns of circularity. Everyone seems to be signing a partnership. Now it's OpenAI with AMD. Before that, it was OpenAI with NVIDIA and Intel. And then you've got OpenAI and Microsoft. It's just going round and round.
Yes, I think it's a very, very good point, actually. I think there is some suggestion that things are just indeed going round and round and round. And I think that we're in a situation now where there are concerns beginning to build up about a bubble in the AI stocks and tech stocks in general. You've started to see the market really flattening off a little bit over the last 3 or 4 days or so. You've had a lot of warnings from well-known people such as Jamie Dimon about what the market is doing. So I think we may be coming to an end of this very, very strong run in technology, at least for the time being. Now, I don't expect there to be a big sell-off because I think what's different between today and, for example, the tech crash in 2000 is that these companies have got real businesses and they're generating real revenues. And there is a lot of investment going on. But I think you're right. You've hit the nail on the head there. I think there's just too much going on now in the sector. And everyone's getting too bullish on every piece of new headline, and I think we're set for a pause before too long.
Set for a pause before too long, but there's no way to kind of sort of, what should one do? I mean, if you're in the US, you own these stocks, maybe you can lighten up a little bit. But any implications for us here?
I don't think so because, and you've heard this from me before. I mean, what is important for emerging markets generally is the performance of the dollar. Now, the dollar is a lower dollar is what pushes investors towards riskier assets overseas, such as emerging. We've had a really, really good rally this year, of course. And I think the rally can go on a little bit further. Now, the dollar's rebounded a little bit over the last few days, and I don't think it's really had that much of an impact in pulling emerging markets down. So I think the thing that could happen in the US that would really pull emerging markets down is, number one, if you got a really hefty sell-off in equities in the US, which I don't think you're going to see. I think you're just going to get a pause, some rotation, which you've already started to see into some of the, should we say, less popular sectors over the last several months. And the second thing which would really, I think, bring emerging markets under pressure would be if the US fell into recession. And that, frankly, doesn't look very likely at the moment. Although, of course, one of the challenges the market's got, and I think this is a reason why people have become a little cautious, is we don't really have much data now because of the government shutdown. And I think it's a very bad time, I think, to have a situation where we're not getting the data. But those would be the things that I think would hurt.
Jeffrey, I should have qualified. My question actually was the opposite. Will a pause, because, I mean, the US tech AI, large cap AI and technology has been this magnet for anyone who can invest across borders.
Yeah.
All money is gone in there. So if that theme starts to slow down, people start to look elsewhere. So it's actually not negative, but maybe positive for flows. We've had negative flows, FII flows for a long time.
I think that's right. And I think the key, forgive me, I think that's right. And I think the key here, as I say, is going to be the dollar. And I think if the US were to pause or pull back a little bit, as long as you don't get tremendously negative performance by the US, you would see money moving back towards, moving yet more towards the emerging markets. Now, if you look at India, which we've talked about, of course, many times in the past, I think India's got a lot going for it in terms of scope for lower interest rates. You've got probably on the back of the Israel-Gaza deal, although it's only stage one deal and we don't know if it's going to hold. That's probably going to be negative for oil prices. The economy's doing reasonably well, and of course, it's been a big underperformer. And so I think a pause in the US and a slight pullback in tech, as long as that's accompanied by a real key signal to move overseas, which would, I think, be a weaker dollar, and India could well be a major beneficiary of that.
All right. Hi, Jeffrey. Good morning and good to see you in. A quick word on the gold prices. It's been moving from strength to strength. Uncertainty in various parts of the globe, as well as a weaker dollar. Well, that's boded well for gold prices. Do you think that as well is ripe for a pause? Because if we look at the gold ETF data, it's still not at those highs that we saw in tonnage terms that we saw, say, 3 years ago. So your view?
I'm skeptical about gold going much higher right now. And the reason for that is because if there is some real truth in this suggestion that we are now getting a stage one agreement between Gaza, therefore Hamas, and Israel, with prisoners being exchanged. That is going to be a development which leads to a little bit of a retreat from safe havens. And you're not seeing it yet in the dollar today. You are seeing a little bit in gold, which is pulling back, maybe a bit of profit taking, not obviously a big move. And of course, we have to see what happens in terms of the equity market. Now, I'm personally a little skeptical about this stage one deal. There's so many other things that have got to be sorted out before we can say this quote unquote war is over. But one thing that would cause some significant, I think significance too strong, some notable profit taking in gold would be in the event that you started to see one of the big conflicts around the world, in this case Gaza, Hamas against Israel, begin to settle down into some sort of peaceful conclusion. We're not there yet. We've made a step towards that. But I personally do not see gold just powering on and on up to 5,000. I think it's well due a pause as well. And I think this situation in the Middle East could be a trigger for that.
All right. Jeffrey, we'll leave it there. Good conversation as always. Thank you very much for joining us. Appreciate it here on CNBC-TV18.
It's the 44th record for gold this year. 44th. I mean, it's just getting a little too precious, this precious metal.
Who said everything that glitters is not gold?
Yeah.
Well, that sounds foolish now, doesn't it? By the way, March is when we hit $3,000. Yeah. So, we go from that, doubling record, which is 5 years, but $1,000 from March to now. Wow. So it's just, the pace has picked up quite considerably. Let's just quickly run you through interactions which are lined up here over the next 2.5 hours or so. We have 8:35, the management of Satvik Green Energy joining us to talk about the second quarter earnings. We have at 9 o'clock, Sandeep Agarwal of Sovelo Investment Managers talk about the IT space. TCS kicks off with numbers today. 9:20, Manish Gurmani of Bandhan AMC will be a market master of the day. 9:35, the management of Joyce Alucas and Malabar Group join in to talk about the gold rush in the market. And of course, what is it doing to jewelry sales, volumes, right? Who's buying gold jewelry or gold for that matter at these rates? Central banks are, but what else? Following that, we'll be speaking with the management of Rubicon Research, who's near 1,400 crore IPO, opens the subscription today. Towards the end of the program, Harshvardhan of Bain & Company and Anil Gupta of ICRA on the recent RBI steps to improve ease of banking. So that's the lineup.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you on the other side. We'll just give you a sneak peek into our top 10 segment. IT Motors, Escorts, Lupin, InfoEdge, Prestige Estates, IRB Infra, GR Infra, as well as RBL Bank. They'll all be reacting to positive news flow, while on the flip side, Concord and Senco Gold will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. It's all green on Asia this morning. The Taiwanese markets are up over 1%. Pull up the Nikkei. That's racing away towards a 1.5% up move this week. The Japanese markets have clocked in close to about a 6% gain. While Hang Seng has retreated a bit, but the Shanghai market, which has opened up after a 1-week break, I think that's opened up with some strength. So there is some optimism in the global market. Shanghai will also come up for you on your screen. The GIFT Nifty is suggesting a positive opening. Let's see whether today is a day of strength or we just consolidate like yesterday. Let's talk about individual stocks then. This is CNBC-TV18's list of top stocks for the day. Our entire research team is joining in. Good morning, guys. Sudarshan, let me start with you. What's the latest on the auto front?
Good morning, Rima. So I have two stocks today. First one is Eicher Motor for its subsidiary, a commercial vehicle subsidiary. That's a JV between Volvo and Eicher, and it's known as Volvo Eicher Commercial Vehicle. That will be investing rupees 544 crore to for manufacturing and production of Volvo's 12-speed manual automated transmission, and that facility will be set up in Ujjain, Madhya Pradesh. What does this do? This Volvo's 12-speed automated transmission, it reduces fatigue of driver and also improves the productivity. So it can be taken positively. Second stock is in focus, Escorts Kubota. Recently, Haryana Chief Minister and the government officials had made a visit to Kubota's facility in Japan, in which the company, which is a partnership with Escorts and Kubota, has agreed to make an additional investment of rupees 2,000 crore in the existing manufacturing and R&D facility that's in Haryana. So this also can be taken positively.
All right. So thanks very much for that. Keep an eye out on those two. Well, Lupin is putting in a large amount of money to set up manufacturing plant in the US. Ekta is here with details. Ekta, morning.
Well, yes, Lupin is not taking any chances when it comes to its presence in the US. They've announced plans to build a manufacturing facility in Florida. They will be investing $250 million over 5 years. The facility will have capacity to produce over 25 key respiratory drugs, including albuterol inhalers for asthma patients. The project is expected to create more than 200 long-term skilled jobs in Florida by 2030. The investment is going to be on around 5 acres of land, and Lupin is going to be receiving tax incentives from the state of Florida. If you read their press release, they have spoken a lot about giving back to the US in terms of manufacturing and in terms of investment, and this is in line with that. I expect Lupin to be in the green, considering this kind of investment will also safeguard them from any kind of headwinds possibly when it comes to tariffs.
Thank you very much for that. Keep your eye out on Info Edge. The company has released their Q2 standalone bookings. It's sort of a pre-quarterly update on the overall billings. Now, the total billings have gone up by 12.1%. This is a pickup compared to what they had done in the prior quarter, which was about 11.2%. The key everyone's tracking is Naukri. That is the cash cow. That's the driver of their revenue and profitability. And recruitment. Billings have gone up by 10.8%. Again, an improvement compared to Q1's 9% mark. The recruitment numbers are important in light of all the job losses that we've seen. TCS, remember, we'll ask them about the 12,000 people that they've had to let go on account of, because they couldn't deploy them, anywhere else in the company. So recruitment numbers are important, 10.8%. The key is a bit of an improvement compared to Q1.
Okay, all right. Thanks a lot for that, Reba. Well, let's hop across to Sonal. She's here to tell us about Prestige Estates. Morning, Sonal.
Good morning, Nigel. Well, it was a good quarterly update that came back from Prestige Estates. In fact, it's better from the peers because there's a high double-digit growth in sales, 50% on a YOY basis to come in at 6,017 crore rupees. Volumes grew 47%. So it's a strong growth which came in from sustenance sales, which is basically from existing inventory only. Realizations were up 8%. Their collections grew by 17% as well. And in first half, launches are at 18.1 million square feet. The gross development value that they've added is at 17,592 crore rupees. They're positive to maintain that momentum. So going with green on Prestige today.
Thank you very much for that. Mangalam is now joining in to give us the latest on Concor and Senco Gold.
Well, the second quarter updates continue, and for Container Corp, it's been slightly softer than what the company had been guiding earlier. So the EXIM volumes came in at around 8.7% in terms of growth. Domestic volumes grew 16.7%, and as a result of which total volumes grew by 10.5%. What is it that the company had targeted earlier? For the full year, they've targeted 10% growth in EXIM and 20% growth in domestic volumes. So the second quarter performance is slightly shy. And even the first half, if you look at it, the overall volumes are just shy of 11% versus the full year guidance for the company at 13%, putting the onus on the second half. So see some bit of red on Container Corp. Senco, now after a heady 18-19% growth that we saw in Titan on that base yesterday, 6.5% growth coming in on Senco may disappoint the street. The company said that it's impacted by one, highest ever gold prices, a high base in the same time last year, heavy rains and flooding in parts of Kolkata and West Bengal. So all these factors have actually impacted the second quarter, though they do believe that this year they would do 18 to 20% revenue growth, which is pretty much in line with the first half where they've grown 17.8%. So expect some bit of red on Senco today.
Okay, all right. Mangalam, thanks very much for that. More stocks with news flow. Vivek is here with that list. Vivek, morning.
Well, good morning. IRB Infra is in focus. Both IRB Infra as well as the InvIT will be in focus. Now, IRB Infra has said that they will invest a little over 750 crore rupees in the publicly listed and traded InvIT, and this is going to be done via the preferential issue route. So the units will be acquired at a price of close to 62.95 rupees a unit, and the main reason for this particular fundraise is for acquiring 3 project SPVs from the private InvIT. So the public InvIT will acquire 3 project SPVs from the private InvIT. Separately, the InvIT, the publicly traded InvIT, has also gone ahead and launched a QIP to raise close to 3,250 crore. Along with it, keep an eye out for GR Infra as well. The company has received a letter of acceptance from the State Highways Authority of Jharkhand. This is for the Giriraj bypass project. Contract price of 290 crore, and the completion period is for close to 24 months. And lastly, keep an eye out for RBL Bank. It was the large mover yesterday. Society General yesterday picked up close to a little over 33 lakh shares at a price of 284 rupees a share. So again, fund action continues as far as RBL Bank is concerned.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Eicher Motors, Escorts Kubota, Lupin, Info Edge, Prestige Estates, IRB Infrastructure, GR Infra, RBL Bank. And the stocks with negative news flow are Concor and Senco Gold, where the Q2 updates are a bit underwhelming. But let's move on now and put the spotlight on some more stocks the brokerages are talking about this morning. Sudarshan is back with us.
So Citi has written on Eterna, it maintains buy call and target is increased to rupees 395 per share. It says growth momentum in Blinkit remains stellar and focus on user acquisition is visible in acceleration in app traffic, and market leadership has solidified further in last few quarters. It expects FY26 and 27 quick commerce GOV growth at 123% and 57% YOY, and also expects adjusted EBITDA margin to break even in Q3 of FY26 and expand further to 1.9% of GOV in FY27 and 3% in FY28. For food delivery, it expects stable trends. Next one is IRB Infra. CLS has come out with a note. It maintains outperform call and target here is rupees 72. It says H1 toll collection growth has improved to 9% versus 8% in Q1. And this was done despite early arrival of monsoon that we have seen. And toll growth rate has doubled in FY26 at 100% owned and public InvIT. And also toll revenue from its flagship Mumbai-Pune E-Way was up 4% in H1 of FY26 versus 2% that company had recorded in H1 FY25. Also, IRB Infit's board has approved debt refinancing, and that should support its dividends as per CLSA.
Right, thank you very much for that. We'll take a quick commercial break here. Up next, we'll connect with Parag Thakkar of Fort Capital for some fundamental stock conversation. We'll also be speaking with the management of Satvik Green Energy, who talked to us about their first quarter earnings coming up.
Welcome back. Hope you're having a good morning. Well, as promised, we have Parag Thakkar, the Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you in, as always. Parag, I wanted to ask you about the tech space. You know, later this evening, we'll be getting results that will come in from TCS as well as Tata Elxsi. Now, getting into these results, we've seen some mild buying out there. So there is some optimism that maybe the worst is in the price. How do you approach this sector, and any couple of stocks that you do like?
So we have TCS in our portfolio, about 2 to 3%. We have Infosys, we have Coforge. We have selected names. We have 9 to 10% weight in the our overall portfolio in IT stocks. What I expect is that the valuations have become extremely compelling. So unless you believe that this sector is gone and there is a structural problem in the sector due to this AI-led deflationary revenue degrowth, if you believe that side of the story, then of course there is a problem. But I would say purely from valuation perspective at 20 times for such a quality business which generates 50,000 crore cash flow, I think there should be nothing to lose. And stock has been beaten down completely out of shape. There was some recovery in last 1 or 2 days, but that's okay. So I would say that even a small positive surprise, that like flat revenue, some margin improvement or some positive commentary on deal wins can trigger a 4 to 5% move also immediately.
You should watch for Infosys, because there are reports that the Anthropic CEO, who's currently in India ahead of their planned opening of the office in early 2026, is going to be meeting Infosys. So he will meet Mr. Nandan Nilekani and Salil Parekh. So, we keep talking about global partnerships, but Anthropic CEO, according to reports, is likely to meet Infosys. So that's the other tech stock you should keep on your radar. In any way, if there is, can strike a partnership to leverage India's tech talent, or anything comes out of this.
Well, indeed. So we'll keep an eye out on that as well. Well, Parag, you have liked the larger private sector banks. I think the last time around we spoke about ICICI Bank as well. What about a company like a bank like RBL Bank? There is that chatter that it could be some kind of infusion. Valuation-wise, well, it's not as cheap as what it was at the start of this year, but there was big fund-based buying yesterday, and the stock continues to remain in the F&O band. At around 285 rupees, your view on the stock?
So basically, I will refrain from giving a fundamental call on this company because I don't have it in my portfolio. But I just saw the business update, and business update looked very good actually. From my analysis on the business update, I think this will be one of the banks apart from City Union Bank, which can report QOQ NIM expansion. So I would like to just give you my fundamental analytical view. Of course, many things are floating around in the market, and we have seen that there's a huge global interest in Indian financial companies, right? For example, Sumitomo Banking of Japan bought stake in Yes Bank. We saw that IHC bought a stake in Samman Capital. So this can be another episode like that also, in my view.
But what would you go for in the banking pack? You prefer the larger banks?
Yeah. So basically, see, I'll tell you, my view is very simple. I'm very bullish on second half onwards for the economy because of whatever steps government and RBI has taken. And banking is a leverage proxy to play the economy. So I am extremely positive, overweight stance on financials, led by HDFC Bank, ICICI Bank, SBI, and so on and so forth, and City Union Bank, as I keep saying. So I'm saying that HDFC Bank, for example, just to give you a glimpse, now trades at just 2 times book value on FY27 earnings. PE multiple is just 15, so PEG is 1. Plus, after this 22nd September, the festive-led demand surge and the GST cut-led demand surge, they are the biggest beneficiaries actually. They lend to, auto Maruti, for example. For Maruti car buyers, HDFC Bank is the biggest lender. So they will benefit. I'm 100% sure in second half the credit growth will improve. Now they don't have constraint of CD ratio also. So the growth will accelerate. Margins will bottom out in Q2. From Q3, due to the CRR cut and due to deposit repricing, gradually margins will improve and it will inch back to the normal margin levels by Q1 of next year. So I would say that 15% EPS growth is possible, and 15 is the PE. Price to book is 1.9. Price to book is 2x, and ROI is 1.9. Plus, it's the best leverage, most prudent leverage proxy to play economy. So ICICI Bank also same thing. They have always surprised the market on every metrics, and they will keep doing that. In my view, in terms of margins, also this quarter should be bottom again for them.
Yeah.
And both are very strong deposit franchises with very low cost funds.
Yeah, no, absolutely. Parag, I had, so that's financials and IT, two big areas. And you said GST cut, etc. There's also perhaps, who knows, right? This US-India thing may also get resolved, H2.
Hoping. It's a big hope.
Yeah. Then you add many more segments to this thesis, things doing better, things doing well. I just had a question, Parag, on, so we spoke about some of the, if I can put it that way, older segments, but a lot of the interest is in new industries where there is a fast scale-up happening, right, which is data centers and AI and technology and all of that stuff, right? And it's real. I mean, it's not, it's not, it sometimes feels very floozy, but the point is, it is real, maybe ahead of its time or whatever. Sure. But it's playing out. And there are few names in the listed space as well. Have you done the work? Have you looked at the ecosystem? And does anything make sense here?
So basically, I am playing it. See, I want to play the first wave of any big theme through time-tested businesses. Because even if Suppose that theme does not materialize. The current cash flows are justifying the current market caps. That is how I think, and that is why Reliance and L&T are my bets on this kind of themes. Both of them are putting data centers. Reliance is betting big on AI. L&T is betting big on green hydrogen, data center, semiconductor. And plus their current market caps are, for example, L&T trades at just 24 PE on FY27. And order book, I am 100% sure that they will meet their order inflow guidance. This quarter also execution should be good because of Middle East. Reliance also, for example, refining is doing okay. Retail, again, GST-led demand surge will help Reliance Retail also. In Jio, they are adding subscribers like nobody's business. Like last month, they added 18 lakh subscribers. ARPU is likely to inch up. So I'm saying that I'm playing this theme through time-tested businesses like Reliance and L&T.
Okay. Parag, request you to stay on. We want to invite the first corporate on our show, and that's Satvik Green Energy. This is one of the recent listings. It listed on the 26th of September. The issue price was 465. The stock now is at 500 rupees. It is a manufacturer of solar PV modules. Came out with the Q1 numbers. Manik Garg, MD of the company, will be joining in. And what we'd like to talk to him about is, one, Q1 has been a very strong quarter, but is it sustainable? Secondly, the company is also planning to foray into inverters, so the rationale behind it. And third, the supply glut worries in the solar module industry. Manik, thank you very much for joining in. Let's start first with the Q1 numbers. Very strong, but it's also on a low base. Now, in Q1, you've done about 900 crore of top line, EBITDA margins of 20%. What would FY26 look like for the company? Any guidance you can share with numbers?
Hi, good morning. First of all, thank you for inviting me to the show. And it's been a good quarter for us. I think we've delivered some decent numbers, and I can't give you any future guidance, but this just shows that we've been growing year on year and quarter on quarter. And we're trying to improve our margin profile. Also, we're focusing a lot on that. That is as a result of the three things that we constantly focus on. First is capacity utilization. Second is our diversified customer base. And third is a strong order book.
Okay, all right. Yeah, go ahead.
And so all the three things combined, I think we are able to, perform and deliver the results.
Manik, now, you've come out with this set of numbers, you listed as well. So an aspirational number is, par for the course, and it's in line with regulations. Can you keep up this momentum? You've done around 900 crores in the first quarter. If I annualize that number, you'll be in the vicinity of close to around 3,700 to around 4,000 crores. With margins in high teens, is that doable? So ballpark 3,700 crores with 19% margins, that could be an aspiration for this year?
So in terms of run rate, if you see that, yes, obviously we'll be able to maintain this run rate.
Okay.
Is going to be at this at least with the current capacity utilization. And in terms of margins, obviously there have been certain orders that were executed this quarter that were high margin. Margin guidance I won't be able to give, but definitely margins are something that could soften over the quarters.
So a realistic margin guidance could be in the vicinity of around 16-17%. Would that be fair?
Again, I won't be able to pinpoint a number, but yeah, for now you can see that that's what we've been doing last year, and we feel that that is something that we can maintain.
Manik, just a quickly, morning Prashant here. So will you actively diversify? Because, on modules, etc., there is, as you know, the big concern is this is the best of times, absolutely the best, the peak, right? But then supply will come in and demand will also keep up maybe, but there's a lot of supply coming. And large industrial groups are now getting in. The last one we heard was Mr. Sanjeev Goenka talking to us about they're also setting it up and they're kicking it off and they're expanding, etc., both in panels and modules. So just wanted to understand, will you, do you agree with that this is in that sense peak business-wise in this segment, and will you actively diversify?
So there are two things. I think first of all, we continue to believe that the sector is going to grow. there is a lot of supply, that is a lot of demand that is there in the sector in terms of the capacities that have been laid out, the targets that have been laid out by the government in terms of the like around 55 gigawatt is supposed to get implemented this year. And what the new manufacturing that is coming up is all of the latest technology. The earlier manufacturing, what we see today, the majority of the supplies of the old technology. So I think that is what is happening in the market in terms of supply addition. I don't see a particularly a threat of extended supply because of enough demand. And secondly, of course, over a period of 2 to 3 years, if we see, definitely that the demand will grow, but it will not grow at the same pace it's growing today. So that is why diversification is a very key for us in terms of maintaining our growth levers, and we are actively starting to work on that ahead of time. So that's why in the last quarter of last financial year we added solar pumps as one of the divisions, and now we are adding inverters as one of the divisions.
So what would pumps and inverters contribute going forward in terms of revenues? I mean, what's the ideal mix going to look like?
Right. So majority of it will still be modules backed by backward integration into cells. But solar pumps and cell and inverters would be in the range of 5%.
By?
Yeah, 5%.
No, 5% this year or 5%?
5% you can say for FY27.
FY27. Okay, just a quick word. What is the current pricing of solar cells and modules, and how would it compare with, say, 6 months ago or 1 year?
Right. In terms of modules, I think the prices sort of bottomed out. So cells, if we see Chinese cells, they are getting imported after duties at around 5 to 5.5 cents. And the module prices, again, range around 16.5 cents. And they sort of bottomed out. And from here on, I think the prices are going to sustain if nothing major happens.
Okay. All right, Manik, we'll leave it there and look forward to our future conversations as well. Good luck as you execute and diversify. Thank you for joining us here.
Thank you so much.
Thank you. We'll take a quick commercial break. We're back with Sudarshan and Mitesh with technical trading ideas on the other side. Hormuz will also be joining in with focus on the big movers from yesterday. Stay tuned. Welcome back. There's 8 minutes to go for the pre-open session. Hormuz is here with the big movers from yesterday, and he's going to dissect that with volume, delivery stats, and just making sense of some of the big movers. Hormuz, over to you.
Morning, Prashant, and some interesting names on the list today. Bluestone Jewelry is one of them. There's a recent listing, of course, and jewelry names yesterday were buzzing around after Titan's update. There's a fourth straight day of gains yesterday. It's gained in 6 out of the last 7 sessions as well, so it's been moving before yesterday's trade itself. So the last 7 sessions, the stock has moved almost 25%. And yesterday's trading session, we had more than 1.2 crore shares that were traded compared to a 20-day average of just under 10 lakh shares. And on the delivery front as well, out of the 1.2 crore shares traded, just around 9 lakh shares were marked for delivery compared to a 20-day average of around 2 lakh shares. And it's done well since its listing in August, up around 40% from its IPO price. Yatharth Hospitals, we spoke about it a couple of days back as well. Delivery-based buying continues in this stock. The stock ending at a record high. The volumes were the highest since the start of the year. Close to 40 lakh shares were traded compared to a 20-day average of around 5 lakh. And here, the 6 lakh shares were marked for delivery compared to a 20-day average of just around 2.5 lakh. And the stock is up almost 2.5 times now from its IPO price, which is 300 rupees. Now, AVG Logistics is one name that sprung up among the broader market names yesterday. It snapped a 2-day losing streak. The volumes were the highest in around 7 months yesterday. Now, yesterday's volumes were the sum total of the last 35 sessions put together on AVG Logistics. Close to 5.5 lakh shares were traded yesterday. The 20-day average is only 13,000 shares, and more than a lakh who are marked for delivery out of those 5 lakh, and the 20-day average here too is just over 8,000 shares. And ITI being the last name, we spoke about it on closing yesterday, the 6th straight day of gains. Now 7 crore shares were traded on ITI in yesterday's trading session. The 20-day average is only 7 lakh, and but out of those 7 crore shares, only 43 lakh shares were marked for delivery in comparison to a 20-day average of 2 lakh shares. Of course, very little free float, 90% with the government, 8% with the special fund. So ITI among the top movers on very strong volumes as well.
Thank you very much for that. By the way, the interest in LG Electronics is very high. So yesterday, Tata Capital closed. It was a very large issue, the largest of 2025, 15,500 crore. And the total subscription for Tata Cap was 1.95. LG Electronics, 2 days are over of subscription, and they're raising about 11,600 crore. And we've already seen 3.3%, 3.3 times oversubscription. Parag, come in on LG Electronics. Are you advising people who listen to you, advise, are you telling them to participate in LG Electronics? You're on mute.
Yeah. So LG Electronics and Tata Capital both are sensible, rationally priced and decent companies. So definitely for anybody who refers to my advice, I would say you can subscribe to it.
Rima, if you remember, LG came to the market last year. They tried to come to the market, right? Yeah. They asked for 1,30,000 crores in market cap. This time, the market cap ask is about 77,000 crores. So they've dropped the valuation.
They dropped it.
And I guess what happened is that around the same time last year, when they wanted to come to the market, there was Hyundai. Now, Hyundai, we all know what happened right after listing. It did not do very well. Yeah. So here was another Korean company coming to the market around the same time. So, but of course, Hyundai since then has done very well. The other factor, of course, is you look at LG versus, say, a company like Havells. Havells is a lakh odd crore in market cap. This is 77,000 crores. So there is that bit perhaps also playing out. And LG is a well-known brand. It's Korean, but it's also Indian, right? We all know LG doesn't need very little marketing in that sense and across product categories, etc. So we'll see. As Rima said, there is a fair bit of interest, maybe for good reason. We'll take a quick break. We are back, and we'll have Sandeep Agarwal of Sovelo Investment Managers to talk about the IT sector as well. Stay tuned. Okay, welcome back. I think the pre-open is kicking off now, and we'll sort of get to the rates in just a bit. But let's get technical trades out of the way. Sudarshan Sukhani is with us, and so is Mitesh Thakkar. Gentlemen, good morning. Great to have both of you here. Appreciate it. Mitesh, you go first. How are things set up? And, a little bit of pullback yesterday, but does that kind of sort of damage things? The other thing, of course, is that we kind of sort of turned around from that 25,120, the high was 25,220 or so, but roughly that 61.8% retracement is around from where we turned around. So upper end of the range in that sense, knocking on it?
Well, I think the 61.8% retracement was around 25,120. We got a high of 25,220, but a closing below 25,120. Yet I think the markets are will turn weak only if we see weak intraday averages will take up. And there's a good cluster of them around this 25,000 to 24,970 zone. So if it doesn't break and we have managed to stay above this level for the next few days, good chance that we should make an attempt towards 25, 220, 250 zone again. But in case we start breaking below that, I would be slightly worried and may even, this may even open up some kind of a negative movement.
Okay. Sudarshan, good morning. How are you thinking about markets now?
Yeah, good morning. Well, it's been an uptrend for me, and that uptrend continues. Now, markets will fall. They will have consolidation periods of that's a process in the market that always happens. So yesterday's decline, or even day before yesterday's mid-afternoon decline, is just part of that uptrend process. Now, we have to also put some risk management in place. So my view is that below
24,900. Long positions should be closed. Above that, look for dips to buy. If you already have positions, hold on to them.
Okay, so 24,900 is that cutoff on the downside, below which you can sort of square off positions. Sudarshan, your stocks?
Well, it's on the long side, and yesterday for 2 days now we have been seeing a blistering rally in IT. So that comes in my list. Persistent Systems is a buy with a stop under 51.90. HCL Tech is a buy with a stop under 14.30. Exide Industries is a buying opportunity with a stop under 3.90. And CDSL is that demat company is a buy with a stop under 1510.
Mitesh, what about you?
I have a mix of buys and sells. On the buying side is Infi with a stop at 14.79 for a target of 15.25. Axis Bank has come to support areas, so around 11.75, 5-6 points lower. Buy with a stop at 11.59 for targets of 12.10. And on the selling side is Bosch with a stop at about 38.725 for targets of around 37.600. And Cummins India might be getting into a slight negative zone, so sell here with a stop just about 39.50 for targets of 38.40.
Thank you, gentlemen. We'll connect through the course of the day, but it's the beginning of another earnings season and the kickoff begins with TCS. Numbers come out post-market hours about 4:15. And the stock, while it's been an underperformer like the industry, year-to-date down 20%, this week TCS has seen an up move of 4.5%, while the Nifty IT index is up 3.8% this week, the last 3 days. Now, the question is the pace of the earnings downgrades perhaps come to an end? Now, in the case of TCS, for the last 2 quarters, the company reported a decline in their constant currency revenue growth because that large BSNL revenue was tapering off. But this quarter, the expectation is that revenues will be flat. So it's still going to be a muted quarter. It's not that there is growth, but at least it's not a decline. So constant currency revenue growth, according to our poll, should be up about 0.2%. Secondly, on the margin front, the rupee depreciation of about 2.5% seen this quarter is acting as a big tailwind. It's a positive. And plus, for TCS, in terms of a wage hike, typically they give it 1st of April, effective 1st April. But this time they had deferred it due to uncertain environment. So now their wage hike is effective 1st September. So the wage hike impact on margins will be split across 2 quarters. And in the current quarter, there will be only a 1-month impact. Plus, you've got that INR depreciation. So margins could inch up. What will the street watch in terms of, the big things? One is this, remember they let go of 12,000 people? That's quite rare when it comes to the Tata Group and TCS in particular. It's never happened. So we'll quiz the management on them. They'll be joining us tomorrow. Other than that, the H-1B visa hike, does that increase the on-site cost for the company? What are they planning to do? De-risk it in some way? Then generative AI from pilots, are they becoming big projects? Are they able to monetize it? And is there AI-related pricing deflation? That is the big fear because technology continues to get cheaper and cheaper. So these are some things that the street will watch. And of course, the big picture is discretionary spending coming back. BFSI has been doing well. Does the momentum continue there? Does it spread to the other sectors? But I think the key takeaway is that stock has been a big underperformer. Year-to-date down close to about 20-25%. This week, you're seeing some price action, which seems to suggest some stability, pricing moving up. Growth is missing so far in Q2, but hopefully it doesn't decline. Sandeep Agarwal, the fund manager at Sovilo Investment Managers, is now joining in. Sandeep, first, give us your opening thoughts. What should we expect from TCS?
Hi, good morning, and thanks for having me on the show. So, we are monitoring the sector, and since I run PMS, I don't make estimates now, but I can tell you that the way we are seeing the estimates from the analyst community and the way we are seeing commentaries of different management, my view is that the number which you are projecting, flattish quarter on quarter and a decline of 3% year-over-year revenue growth is what the numbers will be broadly there. And yes, margins may go up a little bit because of rupee depreciation and also wage hikes being postponed. But remember, margin only till EBIT level reflects that benefit of rupee. But on the other income, there could be a negative impact because generally these companies hedge very, means almost 100% hedge they take for the near 6 months revenue, net receivables. So I think, you may not see benefit of rupee at the PAT level, but definitely you will see benefit of rupee depreciation at the EBIT level. So we are also on the same page that, earnings will be muted, growth will be muted. Obviously, the sector has massively underperformed, so people may want to look fresh at this sector and buy some of those names and keep them as defensive or quasi-cash. That is a separate call, but I believe the right way to look at the sector is the PEG ratio, and PEG ratios are still insanely high for large part of the sector.
Sandeep, Rima and I'll get some time with the TCS management later today. What should we ask them?
You should ask them what will the growth will be double digit in next 5 years, any of the year. I don't think it is going to happen.
Okay. Anything on the entire things around AI has been a big talking point. I mean, generally there is understanding and that maybe where India plays in this entire AI thing is not the hardware, etc., but it's essentially application on the application layer, and that's where IT services come up as well.
So, I have always told this many times in last 1 year, 5-6 times at least, that, we are trying to find something from the IT services firm. They are doing their business quite well, and, the maturity of this industry is very high now. So expecting more than mid-single digit to high single digit growth on a consistent basis is little too much. It will not happen. Same has not happened with Accenture in last 5 years also. They have been growing, including inorganic, in mid-single digit. So we should not expect. It is a mature industry. The application also, you have to remember that there is a 30 to 40% decline in efforts because of AI. So I don't think any services company, whether it is Accenture or any Indian company or any European company, they can grow at the same pace at which they were growing during COVID times or before that. I have a very clear view, and we should try to find big tech in our Indian universe. I am very confident we will see 8, 10, 15 big techs coming from India, but not in the same space. They would be in consumer tech. That is our strong call.
Tata Elxsi also reports, now ER&D was one space where we were seeing growth. Now growth is moderated, and then came KPIT when they met, I think, certain brokerages. They're talking about negative revenue growth in Q2. And analysts are saying, well, it's going to be a washout year. I mean, on ER&D, as you said, for maybe IT services, we don't see a double-digit revenue growth for the next 5 years, in any of the years. Forget, as an average. For ER&D, what's the PEG ratio looking like? And do we still have a recency bias when it comes to ER&D? Because they've done so well over the last 5 years, you kind of just expect that it's going to go on.
So, ER&D will grow at 2.5 times of the IT services growth. But the problem is IT services growth itself will be like 3-4%. So even if ER&D grows at 8-9%, Indian IT companies do phenomenally well in the ER&D space. Then also we can't expect more than 14-15% growth. And the multiple at which they are trading are close to 40-50 times. So basically we are talking about 3-4 PEG ratio for a 12 to 15% growth, with all the risk of some challenges happening in the US, some risk here and there. So I don't think, they are even fairly priced. ER&D will definitely grow much faster than IT services, but so are the multiples also much more expensive. So I don't know whether we can make money in the mid-size companies and large-size company. It looks very difficult.
Any thoughts on the global tech plays? You look at that very, very closely. What is your view? There is one camp which believes that we are entering frothy, the frothy space, and maybe tech stocks globally will need to take a pause.
No, so, I have seen in last 20-25 years, whenever this barter system of buying stake and all these things starts, then, that is close to peak. And I am also in the camp which believes that, there is too much of noise on AI. AI is definitely disruptive and doing a lot of good work is happening. Efficiencies are coming, but the amount of money which people are committing, that money will not be required. So basically a bubble is there in terms of what you are investing. Although, we believe that, some of the anomalies, like if a company is trading at $4.5 trillion market cap, I think it is grossly wrong, because finally it will become a commodity at some point of time, and the challenger who is there, he will do phenomenally well. So I believe that, the main player may come down substantially and the challenger may go up substantially. And that is our call for last 4-5 months. And we are seeing substantial outperformance there as well.
Okay, Sandeep, we leave the conversation here for now. Thank you very much for joining in. Back to the markets, back to levels. Sudarshan is with us for his 9-10 call. Sudarshan.
Well, it's Excite Industries. Buy Excite with a stop under 390.
Excite. Mitesh?
Well, you go with a long on Infosys for targets of around 1525 to 1530.
Okay, Excite and Infosys, 2 long calls as we get into trade. Sudarshan is back with us, and he's going to tell us why Prestige Estates should be on your radar.
So in the pre-opening sessions, the stock is sharply higher. It's up almost 4% after the company has released quarterly updates, and those updates were very strong. And now brokerages also have come out with a note, and most of the brokerages are positive on the stock. So first one is Citi. It maintains buy call and target is 1910 per share. It says total sales value in Q1 were up 50% YY and was much better than expectations. And also company has achieved 67% of its FY26 pre-sales guidance in H1 of FY26. MS maintains overweight call and target is 1900 per share. It says company has reported Q2 pre-sales of rupees 6,000 crore, which is 26% higher than expectations. Also, launch pipeline provides very strong visibility. Nomura maintains buy call and target here is also 1900 per share. It says Q2 update beat is driven by one more plotted development that company had announced. Also, reported numbers is strong sustenance sales from existing inventory that company is having. So overall, it's looking positive for Prestige.
Okay, all right. So thank you very much for that. We'll sort of track this one as it opens up. But here's a quick recap of all the other stocks as well that we've covered since the morning. Stocks in focus: iShares, Escorts, Kubota, Lupin. On your screen, Lupin is up about 1.4%. Business updates: Info Edge, Prestige, which Sud just pointed out. Prestige is up almost 4%. And stocks with news flow, there is IRB Infrastructure, GR Infra, RBL Bank, which are up as well. So GR is up about 2.5% at this point in time. Concor, that is Container Corporation, and Senco Gold are the other two names on the back of business updates, which we will track. So market opening coming up in just a bit, and we'll have, we'll look at some of these in terms of how they are starting with today's session. Remember yesterday, IT services, I mean, actually, the number 2, 3, 4, 5, and maybe number 6 stocks on the Nifty were all IT services stocks. So TCS, Infy, Tech Mahindra, Wipro. And this morning as well, the start is slightly positive, and we'll see whether TCS is able to enthuse this pack a little bit more by evening when numbers come out. Look at Satvik Green Energy, 10% in at the end of the pre-open session. It was a big mover yesterday as well. And of course, we had the management with us post the numbers. So that's a 50 rupee gain coming in there. Just a few seconds and we'll look at the headline indices and we'll look at, specific stocks, etc. as well. 25,074 on the Nifty. Nifty Bank is absolutely flat. The sensex is up 0.1%. Small cap index is up about 0.2% or so as well. So that's the picture as things stand right now. So Nifty Bank is now slightly in the red, 1/3%, 1/4% of the mid and small cap indices. Nifty heat map will give you a sense of where we are starting, how many up and down on the Nifty, and then we'll dive straight into individual names. So straight off the bat, it's more up than down. Some should be 30 plus up and the rest lower. Shriram Finance and HDFC Bank on one end. On the upside, there's Dr. Reddy's, Eternal, and Sun Pharma, which is starting in the green. Rima.
Well, Pharma is right on top. Sectorally, the Nifty Pharma Index is opened with a gain of about 1%. And it's not just Lupin, which is planned, investments in India. Outside of that, you've got a Dr. Reddy's, Sun Pharma, Cipla, all surging. The top gainer today is a Dr. Reddy's, and that's up close to about 1.6%. So Pharma is doing very well. IT continues with its gains from the last 3 days. Now the IT index is up more than 4% from Monday to Thursday as we speak. And again, you are seeing some strength coming through in many of these frontline IT names. HCL Tech seeing buying. For HCL Tech, Infosys, Tech Mahindra, Wipro, the numbers all come next week. Today, it's TCS and Tata Elxsi, and TCS has opened the day with a gain of nearly 0.5%. Eternal is the other gainer on your large cap screen. Citi has raised the target price to 395. They've got a buy call on Eternal. They say the growth momentum in Blinkit remains stellar. And they're saying focus on user acquisition is visible in terms of acceleration in app traffic. And Blinkit's market leadership is further solidified in the recent quarters. For food delivery, they expect things to be stable. So Eternal on investors' buying radar. So Pharma is right on top. IT continues with its upward momentum. Eternal is seeing some strength. And throw in a couple of metal names. So Tata Steel and I think JSW Steel. These are stocks with gains of more than 0.5%. Things are quiet, at least for the Nifty Bank. So it's opened in the red now. The Nifty Banking Index is down nearly 100 odd points. HDFC Bank, it's dragging its feet. So that's putting pressure. Also on the way down is Power Grid, Titan, Tata Motors. Titan was a big mover yesterday. So just pausing after the stellar gain. NTPC, Bajaj Auto, actually quite a bit of auto. And banks too, a little bit in the red.
Well, that's right. I think the stock of the morning is Satwik Green Energy. You know, the management just joined us a few minutes ago and they were talking about keeping up the momentum, which will effectively mean that 900 crores is what they delivered in the first quarter. With them ramping up capacity, you know, a number of around 3,800 to around 4,000 crores with margins of around 15 to 16% looks gettable, which means it'll be a sharp improvement on a year-on-year basis. So yesterday the stock was up. Today, the stock has seen some follow-through with another 10% gain. Clearly, the stock of the morning. Operational update, you like Prestige Estates, 6.5%. Street reading it very, very positively. And HFCL as well. As stock, in fact, is doing very well in this morning on rather large volumes. So, big move is what we're seeing on that name as well. What's coming for some profit taking? Micloid Russell, the stock is up more than 20%, I think, in the last 10 sessions. That one's down a little bit. And it's falling on decent volumes as well. So that's coming for some profit taking. Jacob, which saw a big move yesterday, that as well is coming for some profit taking, as is the case with ITI. That's another name that's coming for some profit taking. Anantaraj ended lower because of the QIP, which was priced at a discount, as we normally see. Now, in fact, that stock is bouncing back a little bit, up 1.5%. But the markets, as flat as can be, the Nifty Bank is down 100 points.
Okay, all right. I think we are just kicking off the session. Absolutely flat, right? I mean, even keel. 3-point change on the Nifty. 25,045 is where we are at this point in time. By the way, I don't know if you can pull up some of these silver ETFs, right? Silver Bees is the #1 volume traded ticker coming up on my screen on the NSE. It's up 2.5%. So 155 on Silver Bees. And many of these are jumping up on quite nicely, 3-4%. And there are a bunch which are listed out there, which are doing very, very well. Not these. I mean, you've got to look at the financial instruments. All right, Prestige is up 6%. I think we mentioned all of these. Oro, Lupin, they're all up. Vari is up about 4% as well. There is, it's not a bad-looking screen at all. At least as far as the broader market is concerned, 1,300 up and about 1,040 stocks which are lower at this point in time. You know, the reversals are basically just off what big moves from yesterday. Imco Electronics, 1% lower, was a massive mover yesterday. Salzer, huge volumes, around 5%, was a big mover yesterday. Bluestone was on Hormuz's list earlier today. Big move yesterday, reversing a little bit. And of course, RBL, which went up 5%, is down about 1.5% as well. So that's it. Otherwise, it's not a bad-looking screen. Manish Gundwani is with us, head of equity at Bandhan AMC. Manish, great to have you with us here. Appreciate your time. You know, we had one. It's like a round trip. Came up to these levels earlier, then came back down. We are back again, knocking at 25,100, 25,200 yesterday. So the question is there enough in the tank for us to move ahead? And this is a time, Manish, where global equities, global markets, etc., are making new all-time highs. Even, a geography like Europe, unloved, underowned, breaking out. Other Asian markets, US, of course. What's your sense, Manish?
I think we're going through a fairly healthy correction, just like October 21 to March 23. I think India seems to be a different phase versus emerging markets. We first outperformed, and this year we're kind of giving away that outperformance to a certain extent. But I think the structural underpinning of this bull market remains intact, which is what is now being called the debasement trade globally, that most of the developed countries have very high government debt, because of which they are running negative real rates in the case of something like Japan. And I think the broad expectation is US, Europe will kind of follow. We are seeing fiscal deficits remain very high, even when the economies are doing well. So in US, you are seeing a fiscal deficit, which normally shouldn't happen in a normal economy. The debt to GDP of most developed countries is more than 100% to GDP, which is typically a red flag. So I think when you see gold, when you see silver, when you see Bitcoin, I think risk assets have good momentum because eventually people are reading into the situation that kind of money printing, if you're cynical, that's the phrase, that money printing will eventually happen in US, Europe, and continue to happen in Japan.
So how long, Manish, hi, morning, Rima here. How long will this period of consolidation continue for a market? It's been over a year. Does it extend, say, for 6 more months till a tariff comes and then we have a tactical bounce? Because there are some comparisons, I mean, not comparison, it's not the right word, but, you know, some have also referred to India's lost decade. And at that time, you know, the returns, the CAGR returns were very, very modest, low single digits. I mean, is there a possibility that this consolidation just extends for 2, 3, 4 years?
I doubt it because, as I said, the structural underpinning of this bull market is very loose monetary policy by most of the developed countries where most of the capital markets and economic growth resides. So I do think that, if you see the last 3-5 year returns of large cap, but more in the mid and small cap space, most of the funds have done, 20-30% CAGR. We can't be that greedy that we expect every year those kind of returns will continue. So to me, this is just that kind of consolidation phase. How long it will last, I think market time is obviously very difficult, but I do think difficult to expect very big returns over next 1 or 2 quarters, not because of anything fundamental. It's just that the supply of paper is so high that it is very difficult to absorb that supply and still create big return. That is my gut feel. But from a 3-5 year perspective, I am very confident that we will have, I think the large cap may do something close to nominal GDP, but I do think a good stock picking fund should be able to deliver materially above that, because I do think liquidity will be healthy, and when liquidity is healthy, the broader market tends to outperform the large cap index. So I am not of this secular stagnation kind of view for India. I just think that we made excess returns from 2023 and 24 calendar years, and we're kind of having to live with a bit of low return for 1 to 1.5 years, and then we will have the structural uptrend continuing.
All right. Hi, Manish. Good to see you. When, I recall in one of our conversations, you were talking about there's a decent risk reward on metals. And China as well, you were calling out probably that, they're based out and things could recover. Both those two have worked. The Chinese markets have actually outperformed the Indian markets in the last 1 year or so. And metals have held their ground, even amidst the market volatility. What's your view from here on? Do you think there is still value with regard to metals? China seems to be going for that anti-involution, which in turn will make them reduce production. And India's got their safeguard duties to protect the domestic industry. Bodes well or bulk in the price?
Yeah, I'm quite positive on metals, although you have to be a bit nimble around this sector because things change very fast. But 2, 3 things, right? I mean, first is, as I said, the structural underpinning of this market is liquidity creation by monetary policy. And if dollar weakens, for example, it typically helps all commodities. So if you divide metals into non-ferrous and ferrous, I think ferrous is more a protection trade versus the anti-involution trade, as you said. That's a different trade. I like more the non-ferrous part because if you see aluminum, most of a big cost is electricity. And we all know globally electricity is in short supply given the AI capex that is happening. So even though I don't think global growth is going to be great, I don't think China is ever going to grow back the way it used to. So I'm not so bullish on global growth, which is typically one reason to buy commodities. But I think the monetary printing of money, along with the fact that some of the cost push in these commodities is going to be healthy. And finally, look, I mean, you can only buy gold till a certain level. I think that liquidity will go to commodities and equities finally.
Yeah. Point taken. By the way, the market's picked up, right? 55 points, 60 points, 25,100 is back on the table after yesterday's sell-off. Manish, I was just looking at, we were talking about, you said debasement trade, right? And it's absolutely right. It's just, we all I think post GFC, gold was supposed to do this and that, and there were so many views, and they were all right. It's just that maybe they were just ahead of the calls were, and you can never time these things, right?
Yeah.
But it was always clear for 15 years, but I guess no one believed it because, and when prices move, then you start to believe it, as it is with so many things. But what's the view now, Manish? I mean, I know you're an equity man, but if I were to ask you to comment, I'm specifically on gold and silver prices from here.
No, I think you should have it in the portfolio. My view is that in this debasement trade, there are various risk assets, right? You have gold, silver, you have Bitcoin, you have emerging market equities, you have Indian equities. I think you should just own a basket of everything because nothing is cheap. Everything has done well in the last 3-4 years broadly. But the simple point is that we've not seen government debt to GDP at a global level at this level. Like more than 100% is the norm now. And you see a place like Japan, the new prime minister is still talking of tax cuts and fiscal aggression. It's quite ridiculous to my mind. How much money can you print? But that is the way things are going. And in a weird way, it is risky not to be risky in that sense for asset allocation. So I do think you should have some proportion of gold, silver. Now, obviously, how much of equity, how much of gold, how much of silver is everyone's risk profile fit. But I think you should have, although it's done well, but it is when you see the fundamentals of the kind of money printing that needs to happen to service this government debt, we should have some hedge against that.
At an AMC level, you all have been anchor investors in many of these recent IPOs. I think LG Electronics also, I saw your name. Before that, Urban Company, that was a big one. And even in some of the smaller ones, like a Pace Digitech or an Anand Rathi. So participating in, across the board, what is your view on what we're seeing in the IPO market?
So we don't have a black or white view saying IPOs are bad or IPOs are good. I think we evaluate each IPO on its own merit. And obviously, we also have different fund managers who have different thought process. We don't believe in having one thought process across the house. So we look at each IPO on its own merit, and we just, based on fund manager view, if we like it fundamentally, we don't really worry about whether it's an IPO or not. We just see it as another stock to consider. So yeah, we're pretty open to new ideas in that sense.
No, absolutely. New ideas in that sense. One other thing which is done very well. Actually, money has gone into two things. We were talking about precious commodities. The other one, it is into US stocks, and in US stocks has gone into all these new themes, newer themes. AI and data centers, and now, of course, things like quantum, etc., nuclear. Very little by way of plays here, right, Manish? You've looked. Have you found any?
Yeah, I think there are a couple of plays on data sovereignty and hyperscaler exposure, not very big. But yes, I think we should put in effort to see how that wave is going to impact India. Honestly, I do worry about AI, the kind of job impact it will have. No one knows what's going to happen for sure, but there are some who believe that the job losses will be very acute before new jobs get created. See, typically any new technology, when it comes, people get scared about job losses, but eventually the net job creation is positive because it creates different types of jobs. Now with AI, given the scale of this technology, there are fears that the job losses will first be so acute that it will impact countries like India. I do worry about that. It's a tail risk to my mind. I still believe generally technology is good for job creation, but you have to keep your mind open, right? I mean, we don't know how it will play out. But yes, on the positive side, if you want to play this AI capex, the data center capex, I think again it won't be available in the large cap space. Most of it is available in the small cap space, but yeah, there are a few plays out there.
Just for, if you can point us in the right direction, Manish.
I will not be able
not as a this thing to buy, but I mean something you've looked at and of course make it clear that people should consult their financial advisors, do their own research, etc., before they do anything. But in that sense,
so, Prashant, I feel that when an economy goes from 500 billion to let's say 4 trillion, you can afford not to be in high tech. But if we aspire to go from 4 trillion to 10 trillion, we need to own some tech ourselves. So we will need a bit of protection or let's say sovereignty around some of these technologies. You must be following that, for example, one of the enterprise software suites the government is pushing very hard. At the same, with the same logic, I do think that when we are hosting data with these global hyperscalers like AWS, Google Cloud, etc., there is a bit of risk you're taking, right? I mean, because ultimately, even if the data center is in India, but it's a US corporate, that data is in one sense available to the US government if they want it. Now, that kind of, for 95% of data, that won't matter. But for 5% of data like defense or academics and all, I think that will obviously be an issue. And then the only way out then is to create some domestic champions in hyperscalers. And I think, see, nothing is sure, but that is a hypothesis we have. So I think it's good to have some exposure to those kind of plays.
Manish, one word answer since we're out of time. And this is for those who want to, invest in a thematic or a sectoral, a fund, for instance. Which is the sector you're most bullish on and which sector will you avoid completely?
So I like this theme called these innovation funds, which have come up recently because to put it in a nutshell, these are the NASDAQ equivalents of the US markets. And we see that over 30, 40 years, the NASDAQ has obviously outperformed S&P 500. Because as the economy develops, the knowledge-based sectors become larger and larger part of the ecosystem. So I do think innovation is a good theme to look at.
Yeah, absolutely. That covers a fair bit, right? I hope that fund will touch upon and do some of what we're talking about, maybe a better way to get exposure. Thank you very much for joining us, Manish. Appreciate your time here on CNBC. All right, we'll talk about Senco Gold. Mangalam is standing by. I think there was that second quarter update. Mangalam, over to you.
Stock is lower in today's trading session, lower by about 2.5%, because the street is clearly disappointed after seeing what Titan has done, after seeing what Kalyan has done. Street was thinking that maybe on a lower base and because of its higher exposure to West Bengal, where the festive season started earlier, they would do a lot better. But turns out, no, it's 6.5% growth that the company has reported. And that the company attributes to higher gold prices, a very high base, and unseasonal or, high rains along with flood-like conditions in parts of Kolkata and West Bengal to the weakness in their overall performance. And that's something that the street is disappointed by. Though for them as well, because of higher gold prices, diamonds have grown at around 12% in terms of value. But remember, that accounts for a lot smaller share in their overall portfolio as compared to, say, someone like a Kalyan or Titan. Importantly, they've added about 5 stores, and they are sanguine about the next couple of quarters where they believe that they can go ahead and do about 18 to 20% growth, which is not a big material uptick from the first half of this year where the company has grown about 17.8%. So to that extent, management commentary on outperformance beyond what it's already reported would be crucial, especially at a time when the larger peers are doing a lot better.
Thank you very much for that. Let's go across now to Ria for Lupin.
Well, yes, Lupin is around 3% higher after they've announced plans to build a manufacturing facility in Florida in the US. Now, the company has said that this project reflects the company's long-standing commitment to US patients and the healthcare system as well. And the new site is going to expand their US-based pharmaceutical company to produce critical respiratory medicines. Now, Lupin is going to invest around $250 million as a part of this investment over the next 5 years. And this investment will be on 5 acres of land. And further, they've also said that the facility will have the capacity to produce over 25 key respiratory drugs, including albuterol inhalers for asthma patients. Now, this initiative, the company has said, aims to strengthen domestic manufacturing, diversify their supply chains, as well as enhance medicine security. And the project is also expected to create more than 200 long-term skill jobs in the region by 2030. And lastly, they've also said that Lupin is going to receive tax incentives from the state of Florida for this. And on the back of this, the stock is higher by around 3%.
Okay, all right. Lupin, 3.5% higher. Ria, thank you very much for that. Well, we're talking about, precious metals, gold, silver with equity people. So let's talk about precious metals with precious metals people. And our next discussion is exactly that. Varghese Alukas is Managing Director at Joyce Alukas. And we have Dilip Narayanan, Head Treasury and Banking at Malabar Group of Companies. Gentlemen, great to have both of you here. Appreciate your time, gentlemen. Prashant, this side. Mr. Alukas, if we can start with you, with this absolutely stunning move in gold prices internationally and here, naturally, could you give us a sense now, because the quarter has ended, all right, and that's the big 3 talking points which are coming up on your screen right now. But the thrust basically is this, Mr. Alukas.
Yeah,
gold jewelry. Are people buying gold jewelry at these very high prices? And if you can give us a sense of what the second quarter number, that is September ended quarter, looks like.
Yeah, good morning. So we are feeling the higher price of the gold price from last 6 months. Even today, the gold price has been a record selling price around 11,380 rupees per gram for 22 karat jewelry. And last 2 weeks, we see that there is, due to the festival season and the Diwali sales which is going to come up, and then the Dasara and Gandhi Jayanti holidays, there have been uplift in buying from the customers who have been coming to the jewelry, and the sentiment is high that if the gold prices keep on going up, people are now coming back to jewelry to buy the jewelry. And last quarter, we have been recorded at 20% higher in the sales. So coming month is the Dhanteras and Diwali season, which Indian customers always buy jewelry, and it's a sentiment that every Indian household buy jewelry, not only as a style statement, even as the investment they buy. So we are seeing a good sentiment to buy more jewelry in coming Diwali days.
Mr. Alukas, sorry, you're saying July to September has seen 20% growth in sales?
Yeah, in the sales.
Right. That is
higher gold prices.
Right. That is value-wise, right? Value-wise.
Value-wise. And in volume-wise, both are, most of them are having a dip in 20% in same way.
Dip of 20?
Yeah.
So volumes are down 20%, and the value is up 20%.
Yeah.
That's a nice, neat headline you've given us, Mr.
Because the volume has gone down.
Yeah, obviously. Because, I mean,
it's the revenue in the higher prices.
Yes. Mr. Narayanan, come in here. Is that your experience as well?
Well, first of all, thank you for calling me for this interesting discussion. Mr. Varghese is kind of right on what he's mentioning, but I can see, I was mentioning about this demand a couple of weeks before, at least 3-4 weeks before in one of our panel discussions, that the pent-up demand, which the customers had not been buying for some time, has started now. There is panic buying also happening. There is festive season buying happening. There is also a sentimental fear which has gone into the customer, that buying is also happening. So fundamentals are all kept aside, and it's all now sentimental, and then that is this kind of buying pressure we've not been seeing for some time now. And globally, it's not only in India. Globally, there is huge demand. These sovereign countries, the central banks are purchasing. The each and every country, reserves are going up in gold. So yeah, this is the right time to be in to invest in gold. And the as I always mention, the trust on gold is increasing day by day.
Mr. Narayanan, just sorry, you said you used the word panic buying.
The reason why I mentioned that word is because there is market the market saying that the price would still go up more, and then you would see around 5,000 levels touching, which is which technically technical analysis also has their own reasons to say that. Personally, if you ask me, it's completely my personal my personal opinion on the yellow metal is that it is on a bull run, and I won't be surprised that if it again jumps another $200-300 from here while we speak, and we're going to definitely see a good run. There is business. Apart from that, very interesting part is that investment bars are also been now in good demand, which is not normally. It takes the back seat in India as compared to any other country. But now you can see the investment bars also performing well.
My next question is actually what kind of value growth will we see over the next 2 to 3 years? Mr. Varghese, as you said, right, so far value growth of 20% is sustaining because of the surge in the price of gold. Now laying out a scenario, say in the next 2 years, gold prices don't go up. It's hard to imagine gold prices going up 40% every year. If they stay at these elevated levels and volumes continue to remain muted, it's hard to imagine people, spending so much with gold prices at, 1,24,000 for 10 grams of gold. What could be the kind of value growth? Can you sustain then value growth of 20%, say 2 to 3 years? What are you internally working with? Mr. Varghese?
Yeah. So, as we said, the gold price have been in record levels, as Mr. Narayan said. From the 4,000 levels, it may again go up to 5,000 levels, is what the markets say. So, in that case, the value of gold price will be seen in the revenue, where there can be again 5 to 10% increase in this case of gold price going up. But we see the volumes are a little bit going down, but now most of the jewelry have been made in a lighter way and in a different way of price centric. So we still feel that the sales can be brought up with the lighter weight jewelry to make up the level of the revenue we have. But the gold price, again, if it is increased, we again can say 5 to 10% can be increased, but we don't know where the prices, because every 1 or 2 months, it may still go up to 5,000 levels. So maybe 5 to 10% again can be increased in 2 3 years.
All right, it makes the inventory hedging question very, very relevant then. Mr. Alukas, how are you all managing that? What proportion of your sales are hedged?
So we have been buying in a fixed way, like as we are a private company. So we buy on spot, and we see last 4-5 years where the gold price was in 2,000 levels, which has come up to 4,000, 4,035. So all the inventory prices have been going up for last 3-4 years. So we are really seeing the profit percentage and a higher valuation in our books.
Dilip, same question to you. Do you think, at a company level, the industry level, may need to, let's assume gold prices don't go up to 5,000, right? If they just stay as it is, what would be the volume growth that you anticipate going forward once this festive season comes to an end? It's already down 20%, but going forward, what would the what would the sales look like, assuming gold prices stay where they are, and therefore the value growth for the industry for the next 2 years?
I think it would remain the same at around 10 to 15%. And the reason why I'm telling this again is that I would repeat my same statement that this demand is not seen for many years. This kind of demand, this doesn't look like a festive season demand. It is also people gathering gold as a safe haven. So and this if price keeps going up, surging up, the demand will keep coming up again and again, and you might end up with a very good sale for this entire financial year.
Mr. Narayan, when you say this does not look like festive sales, you're talking about feedback from customers, retail, normal people.
The normal people are buying. So again, I'm telling you that apart from normal people, there are investors who are got into the market. So that is a sign of real demand which is coming into gold, or I would say that added trust which is coming into gold, which was anyways there.
Yeah. Let me ask you this, as Mr. Alukas also told us, volume is down 20%, right? So, Mr. Narayan, what percentage of your this move that we've seen? Gold prices were $3,000 in March this year; they're now $4,000, right? What percentage of this move is investment led in India? I'm saying not globally, but what you're seeing at your end. You said demand for bars, etc., is also rising.
It's too early to calculate a percentage of the growth which is there in investment bar as of now. But definitely from what it was earlier, there is a jump of almost 5 to 10% at this point of time. But then you have to wait and see how the numbers increase as the days pass by, because now Dhanteras is is the upcoming festive, and then the Diwali, and then there are a lot other festivals also. There is a year-end Christmas coming up, so you might have to wait for another 1 month or two to see how this investment bar demand, whether it's going to sustain or not. But for the kind of purchase which is happening, it looks like that this is going to sustain.
And for Malabar as well, volumes are down 20% approximately in the ballpark in Q2?
I would not want to comment on that, because I would check on the numbers before I would comment.
Okay. Mr. Varghese, would you have a number? What percentage, according to you, if you have to estimate, would come for investment purposes? Any number?
We're not still taking the numbers as of now.
Sure. All right. And do we know the rate at which the unorganized market has grown? If organized has grown 20% value-wise, unorganized would be at?
Yes, organized retail are been coming up in the industry. Most of the jewelers are coming to the now organized way.
Okay. All right, gentlemen, appreciate you joining in. Thanks a lot for giving us your take, and it spells good times, I think, for all gold buyers. So wishing you all a good festive season as well. For the timing, we'll slip into a short break. On the other side of the break, we'll have the management of Rubicon Research, whose IPO opens today. We'll have Mr. Parag Sancheti, who will be joining in. Welcome back, Phil. The markets have flattened out a little bit. We had danced way closer to around the 25,100 odd mark, but now from the top, we've seen some kind of profit taking. The good news, though, is that the breadth of the market is still in favor of the number of stocks that are advancing. So that's good news. But let's focus on the new IPO. Pharmaceuticals company Rubicon Research's 1,377 crore rupee IPO opens today. It comprises of a mix of fresh issue of equity shares that's worth around 500 crores and an offer for sale of around 878 crore rupees. We're now joined by Mr. Parag Sancheti, the Executive Director and CEO at Rubicon Research. Hi, Mr. Sancheti. Good morning. Thanks a lot for joining in, and welcome to the stock markets. Well, let's get a couple of details out of the way first. If I look at your issue, there's around 500 crores of fresh issue. And that will be used to repay a debt, I think, in the vicinity of around 300 crores or thereabouts. So just confirm that number. What will this money be used for? And in terms of debt repayment, could you quantify the interest savings?
Yeah, so Thanks. Firstly, thanks for having me on the show, and obviously, indeed, exciting times for the company as we go public. Yeah, the 500 crores which we are raising is primary would be going primarily towards debt repayment and then partially towards inorganic growth opportunities. We currently, if you look at the debt is around 400 crores plus in the books. So, you could, considering estimate, we don't want to guide exactly to the number, but I think we are repaying around 300 crores of debt. So that would be the kind of interest rate savings which will be falling through to the bottom line.
So you become debt-free post this?
We'll have debt for the working capital, but otherwise majority of the debt will be.
Back of an envelope calculation would say 310 crores, approximately 10% saving. So, that should be in the vicinity of around 32 crores or thereabouts. That would be a fair estimate, right, of interest saving?
Yeah.
All right. And the inorganic growth that you're talking about, that'll be, in the vicinity of around 150 to 190 crores, the amount you'll want to spend?
Yes.
And typically in your business, what kind of sales, if I look at the sales upon market cap, what should be the rough estimate? If you're looking at an acquisition size, say, of around 150 crores, what should the revenue potential of that company be? A very rough estimate for your industry.
Yeah, so I wouldn't do it because if you see the history of Rubicon, I think we've never done acquisition just for the size or the revenue of the company. So we've done 5 acquisitions in the last 5 years, and all of them we have kind of done it for the capabilities. So I wouldn't say the sales is a good proxy or how we are going to look at doing inorganic stuff. We'll follow the same discipline we've been following to get capabilities and then bolt on that. And that has kind of disproportionately paid for us in the last 4 or 5 years.
Got that. So that explains how you're planning to utilize all the funds that you're raising via the IPO, the fresh issue for the acquisitions and paring down the debt. Parag, morning, this is Reema here. Just give us a quick overview about the company. How are you different from the other players? And also, almost 97% of your revenues, are exported to the US. Are you going to be impacted by this 100% tariff on branded and patented pharmaceuticals, imports on that starting 1st of October?
Okay. So I'll just give you some brief of the company and then I'll dive into the question on the tariffs and how we look at the US business. So I think we're a very fast growing specialty pharmaceutical company with a portfolio of products that includes both specialty and drug device combinations. We have 3 manufacturing sites in India. We have 2 R&D sites, one here in India and one in Canada. If you look at, I think, just the key business highlights for us has been, I think we've been the fastest growing Indian pharmaceutical company as compared to 6 Indian and 4 globally listed peers by Frost & Sullivan. R&D is a big focus, and R&D focus coupled with the amount of money we spend more than average of the industry on R&D, I think has led to a very, very robust pipeline of products coming in. If you look at, as on 30th June, we had 16 specialty products which have no competition or max 1 competition. We have 4 drug device combination products which are approved in the US. So I think this, if you just look at these highlights, talk about the R&D, product selection, and our execution rigor, which we have built the company with. So if you look at, as compared to any of our other competitors, you look at all our metrics like commercialization rate 86%, our ROE around 29%, ROC around 26%.
Yeah, Parag, we have those numbers are there. Morning, Prashant here. What is when you say specialty? What are specialty products? How do you define them?
So we define it in a very, very economic term when I think people have struggled to put it as dosage form. So we say if we have one or less competitor for at least 1 year from the time we launch, we call that a specialty because that gives us pricing power and sustainability of the pricing power.
Are you, is the way you operate, is that like a CDMO, a CRDMO?
No, we are a product development company with our own front-end marketing in the US. We sell both generics and branded products.
So it's not as if big companies come to you and say, well, we want you to make this or...
No.
Okay.
We are an end-to-end product development, manufacturing and selling company.
And all of this, all of the manufacturing happens in India?
Some majority happens in India, but we do also have CMO sites in Europe and the US.
Are you planning to expand your footprint to the US? And just to complete that point about any impact from the Trump tariffs?
So I think the generics I would not touch base because that's, I think, quite a settled matter.
For you.
For us. And if we come to, I think the branded, we have 3 branded products in the United States. One which gets manufactured in the US, 2 we manufacture here and send it. Obviously, we have already built-in plans which are there mitigated to ensure that there's no going to be no impact on the tariffs on those products too.
Okay, all right, Parag, help us out with a couple of other factors. If I look at your margins, they have improved from early teens, that's around 10-11%, to close to around 20%, in the last few years. I know that you'll not give us a fixed guidance, but the margins that you're doing, is it sustainable? Point number 1. And point number 2 is on pricing. The industry on the whole has seen pricing erosion to the tune of roughly 6 to around 8%. However, you have gone ahead and you have managed to take price hikes as well. So please explain this to us, margins and pricing.
Yeah, so I'll first explain the price hike part of it. I think it's not price hike. I think what the Frost & Sullivan report says is how is our portfolio comparing across the industry versus the other portfolio, other listed or unlisted companies who are operating in the US. In that case, the way our strategy on sales has been, I think for the same portfolio of products, what prices we had in 2022 in 2025, we have seen an 8%, as per Frost & Sullivan, we have seen an 8% appreciation, whereas the industry has seen around a 5% depreciation on the pricing. So I think that talks about the way we have selected the products and how we execute market share or sales strategy in the United States. Now coming, I think, margins part of it, I think the margins definitely will sustain at the levels which are there, which if you look at our history in the 23-24, obviously we've spent disproportionately on R&D to ensure that we have a very, very robust product pipeline, which allows us to kind of build a very, very solid business in the United States and other parts of the world. So I think that owing to very high R&D spend, I think we've been able to, we've kind of by design had margins which were lesser. But I think the margins which you're seeing right now is something which will definitely sustain and will improve. We have more levers to improve that beyond that also.
All right. Prashant briefly asked you about specialty. How do you define it? What is the specialty contribution as a percentage of your mix? If you could help us out with that.
The matrix we give track for that is, I think, as of 30th June, 33% of our gross profit came from specialty, which constituted 16 products currently.
And as a percentage of sales?
No, we don't give that, but I think you can see the margin profile for the company and kind of back calculate on that.
Okay, all right, Parag, you've given us a sense in terms of the business. We'll want to understand more. It looks like an interesting business. Wish you well with the IPO, and we look forward to chatting up with you on the listing as well. Thanks a lot for joining in.
Thanks a lot. Thanks for having me on the show.
All right, and as we were having that discussion with Parag, the markets actually have moved to the low point of the day. So that entire bounce that we saw, that's got sold into. And now the Nifty trading mildly in the red. Slip into a short break. A good time for a technical check. Shilpa Rao of Prabhudas Lilladher will be joining in.
Welcome back. For the markets, it's flattish. The Nifty is at 25,050, but we've come off in the last 1 hour. Shilpa Rao, Senior Analyst Derivative at Prabhudas Lilladher, is now joining in. Shilpa, your thoughts on the first hour?
Good morning, Nigel, Prashant and Reema, and thank you for having me on the show. Talking about the indices sector, we know that there's a resistance at around 25,150 to 25,200 on immediate basis, and support also lies at 25,000 marks. So any declines towards 25,000 should be levels to buy. Keep a stop loss of 24,950 and stay long. Talking about Bank Nifty, any declines towards 55,700 to 500 zone should be a buying opportunity, and one can again expect 56,300 levels for Bank Nifty.
Okay, all right. Hi, Shilpa. Always good to have you on the show. What about individual stocks? What's on your radar?
Nigel, I have two buys. The first one would be a buy in Max Health. Pharma sector is doing good, and Max Health has a good support at around 1130 zones. So that should be a stop loss, and look for targets of 1180 to 1200 levels. The other one would be a buy in BSC. Again, the capital market stocks are doing good. M6, BSC, they're all looking good. But BSC has a good support at 2220 zones. So that should be the stop loss, and look for targets of 2300 zones and above for intraday basis.
Oh, thank you very much for that. Let's talk about stock sectors. Vivek is now joining in. Vivek, on pharma.
That's right. Well, that's right. You know, the Nifty Pharma Index is one of the top gainers today, and all of the generic Indian pharma companies are the ones that are doing quite well. Most of the stocks are up anywhere between 2 to 5%. Names like Zydus, Lupin, Aurobindo, Dr. Reddy, all of these names. So what has actually transpired overnight is that, remember, Indian pharma, especially the generic names, were suffering from an overhang, given the fact that there were various reports coming in from the USA saying that generic pharmaceuticals may be under the umbrella of Section 232 of tariff imposition. However, what WSJ, which is the Wall Street, has reported overnight is that they are saying that Donald Trump may spare imported generic pharma products from tariffs. In fact, they have quoted the White House spokesperson Kush Patel, and he has said that the administration is not actively discussing imposition of Section 232 tariffs against generic pharmaceuticals. Now, WSJ has gone ahead and further said that the decision not to impose tariffs on generics represents a major scale back of Commerce Department's investigations into pharmaceuticals. They also say that, and they've quoted an earlier Federal Register notice saying that the investigation would target both generic as well as non-generic drug products. Given the fact that this particular overhang, at least for the time being, appears to have lifted, all of the pharma stocks today are doing quite well in the session.
Okay, thanks very much, Vivek, for that. So pharma, perhaps flavor of the day today, 3.5%, 4%, Aurobindo there as well. Well, on to a CNBC-TV18 exclusive. Exactly a year after Noel Tata took charge as Tata Trust's chairman, a fresh power battle has erupted involving key trustees. With government intervention underway, hopes are rising for a resolution in this high-stakes corporate clash. My colleague Shireen Bhan filed this report.
There is a fresh battle brewing at the House of Tatas. Now, the rift has now reached the corridors of power in New Delhi. CNBC-TV18 has accessed both sides of the story. Last night, Noel Tata, the chairman of Tata Trust, N. Chandrasekaran, the chairman of Tata Sons, met with Home Minister Amit Shah and Finance Minister Nirmala Sitharaman in New Delhi. Tata Trust trustees Venu Srinivasan and Darius Khambata were also part of that meeting. Interestingly, Khambata is being accused of being part of the quartet of trustees allegedly trying to undermine Noel Tata. Now, this latest power struggle comes nearly a decade after that bitter public battle between the late Ratan Tata and the late Cyrus Mistry. Now, sources close to Noel Tata claim that there is a coup attempt by 4 trustees. Here are the trustees: Darius Khambata, Jayat Jahangir, Pramit Javeri and Meli Mistry. Now, sources close to Noel Tata allege that these trustees tried to emasculate the leadership of Noel Tata and wanted to function, quote-unquote, as a super board. But sources close to the Mistry quartet deny these allegations. They claim that the coup narrative is false and there is no attempt to usurp powers. The Mistry camp claims a false narrative is being painted to make them look, quote-unquote, like villains. According to sources, there are 3 key flashpoints that have triggered the current escalation of tensions. First is the fund infusion into Tata International. Now, Noel Tata is the chairman of Tata International, and an equity infusion was proposed to help tide over the losses in the company. The company is also saddled with a debt of around 2,000 crore rupees. Eventually, the infusion of 1,000 crore rupees by Tata Sons was cleared, but sources say that the matter, quote-unquote, remains unresolved. Now, another flashpoint is Noel Tata's idea to create a position of a deputy MD at Tata Sons. Sources close to the Mistry quarter say that the proposal also created differences of opinion between the Noel Tata group and the Mistry quartet. And the third point of contention has to do with Meli Mistry's appointment to the board of Tata Sons. Now, Mistry, a long-time associate of Ratan Tata, his appointment was opposed by Noel Tata, and sources say this also led to a further worsening of the relationships within the trustees. Now, sources tell us that all 4 trustees who are today being accused of acting against Noel Tata had in fact voted in favour of Noel Tata's appointment as chairman just last year. Remember, Noel Tata took charge exactly a year ago on the 10th of October after the demise of Ratan Tata. It must also be noted that the upcoming board meeting on the 10th of October is not going to consider any of these issues at hand. That meeting, we learn, is about the philanthropic activities of the trust, which is really at the heart of what the Tata Trusts do. So 1,000 crore rupees worth of philanthropic activities on the agenda on the October 10th board meeting, nothing to do with this current battle. Now, with the government getting involved, there are hopes of a de-escalation, and both sides will try, that's the hope, and arrive at some sort of a rapprochement to bring the public feud to an end. But we will have to wait to see.
Okay, there's some visuals, of course, also coming in. Prime Minister Modi meeting UK Prime Minister Keir Starmer in Mumbai. I think those visuals are coming in from, should be the Raj Bhavan in Mumbai earlier today. Both leaders, of course, meeting for the 3rd time, actually, since Starmer became the Prime Minister in July of 2024. The first 2 meetings, of course, were held in the United Kingdom. So we'll see what this kind of sort of leads to. Prime Minister Starmer is on a 2-day trip to India. I think they will, of course, also be, after this, at the Global FinTech Fest, where Prime Minister Modi is expected to make a speech at about 1 o'clock this afternoon as well. So there is, of course, talks also taking place as far as the India-UK CEO Forum goes, and then maybe, discussions at the Global FinTech Fest, which is underway. Today is the last day, 3rd day of that event, which is happening in BKC. So important partnership. And as I said, a 3rd meeting since Prime Minister Starmer took over. Of course, those are visuals. More later. Well, just to sort of continue with that story as far as the Tata Group is concerned, 8 years ago in an interview to CNBC-TV18, the late Ratan Tata spoke about the role played by Tata Trusts in the functioning of the Tata Group. He was speaking with Suhail Seth on why the trust structure was created in the first place. We want to play that out for you.
Mr. J.R.D. Tata often used to refer to Tatas as being the trustees of the people. The Tata family could have become tremendously wealthy by having distributorships, partnerships, etc. in the businesses. But most of the businesses, whether it was steel, whether it was power, or institutions, were set up as institutions for the country. So Jamshedji Tata could just as well have dedicated Tata Steel to the nation or dedicated Tata Power to the nation. They belong to the shareholders and to the people. Personal ownership and personal wealth happened when it happened, but was never the criteria for these companies to be established. So it was natural that he did leave his ownership to his 2 sons, and then his 2 sons, who had no children, left them in charitable trusts as beneficiaries of the companies that they held. So it was a refreshing change that gave way to ownership in an industry not being for the beneficial interest of A or B or C, but for the better good of humanity.
Okay, let's just take a quick commercial break here. We're going to be joined on the other side by Harsh Vardhan, Senior Advisor at Bain & Company, and Anil Gupta, Senior Vice President and Co-Group Head, Financial Sector Ratings. At ICRA, we talk about, the RBI measures to unshackle the banking system. Stay tuned.